I'm mentoring you right now. And you can't even identify it. You can't even recognize the fact that I'm mentoring you right now. But because you didn't pay me, you feel like you're not doing it or it isn't happening. These are the things that you're supposed to learn. These are the things that you're supposed to be looking for. What's the point of you watching my videos or listening to me talk about it unless you're going to put it to practice? That's a terrible waste of time. If you're just listening to me and you're not doing anything with the things I'm telling you to focus on, train yourself, test, build a back testing log of journaled entries and exits and things that you studied in old hindsight moves. If you're not doing those things, you're wasting your time. And that's horrible. Why would you want to do that? Time is something that we don't get more of. And my time is fucking expensive. There's a whole lot of things I could be doing right now instead of talking to all of you. I'm not getting monetized for this. I'm not getting any reward for it, except for I know I'm talking to somebody. Somebody in this community right now that's hearing this. You may be listening to it in the future. You're not listening to it July 21st, 2023. But it's found you. You needed to hear these things. I can tell you this much. When I was 20, I needed to hear these things, but I didn't know that I needed to hear it then because I was worried about entries. I got to find an entry technique. We're getting ready to blow out that sell side, by the way. Went all the way back up to that inversion fair value gap again. Lost my train of thought. Give me a second to get a drink. 45-minute session, remember? Good old ICT. Over delivers. Anyway. Failure is a choice, okay? And if you learn how to determine why should the market go to a specific level? Okay, if you can identify both ends of the perspective or spectrum, okay, and what does that mean? This morning I sent you a tweet on the NASDAQ. I'll give you one market to watch. I wanted to focus on one market. And why did I only pick one market? Why am I not looking at ES? Why am I not looking at Eurodollar? Why not cable? Wasn't cable the favorite pair of you in trading forex? And why aren't you looking at the dollar index? And why don't you ever talk about the Dow? Why don't you worry about what I'm talking about and focus like I'm trying to keep my focus? You ever consider that? You ever ask, well, let me see what I can get from just following whatever he's looking at right now? That's what I always ask when I see people complaining about, why don't you ever talk about gold? Fuck gold. Gold is highly manipulated. Okay. You literally are asking to get burned trading gold. I know there's a lot of people out there with, they're fake brokers. They're going to show you examples of gold and this and gold and that. Gold is an event driven market. So what I do is I take my students into highly liquid asset classes. Forex was my cup of tea for a long period of time, but I took everybody's attention back to where I started as a trader in 1992, commodities and futures index. These markets are absolutely professional. There's no tomfoolery in that. There's no brokers fucking with your spread. Okay. Everybody has the same price. Everybody has the same price when we're looking at the S&P. Everybody has the same price on NASDAQ, unless you're trading a CFD, which I don't do that. But I know some of you can't do it, and that's the only way you can do it. But you're met with that conundrum now, aren't you? You have to deal and factor in spread. So how do you overcome that fear? ICT, I'm worried about because, sometimes the data doesn't match. Right. Well, think about what I already said. You first start worrying about, well, no, I shouldn't say worry. You should concern yourself with where the market's likely to draw to. That is the absolute golden ticket. Because if you know how to do that, given enough time, you will find a entry model that you'll love taking. It makes perfect sense for you. It meets and agrees with your personality. No matter how much money I show I can make with one PD array or another, it won't matter to you. That's maturity. That means that you have found your model. You're not trying to leave what you found. You're now blooming where you're planted. That's the endeavor that all of you should be aspiring to do. That's what I'm trying to coach you all into doing. Not try to make you a master of everything I'm teaching. That's not going to happen. Okay. You need to find one that makes perfect sense to you. Warm up to it and spend some time with it. And when you understand where the market's likely to draw to, liquidity and inefficiency, the easiest way, folks, listen to me, the easiest way to get through the initial learning curve is to do this very thing. Every session, what are we talking about? Well, the market was going to open up at 9:30. I told you I was waiting for the opening bell, and I wanted to see how we traded at these points of liquidity. And I gave you the one inversion fair value gap. I want to see how we treated that. Now, why did I pick that? I'm sure you're probably thinking, why did you pick that fair value gap, and why not this time frame on that inefficiency? Why this one and not that candle? If you look at the range I gave you on a 5-minute chart of the NASDAQ, I gave you the high. I got to scroll back here. My chart's moved forward too much. I gave you the high on NASDAQ 5-minute chart at 1:30 Thursday, July 20th, 2023. The 1:30 p.m. New York local time, I noted that high and the high to the left of it on the 5-minute chart at 12:50 p.m. So for the symbol on the trading view, it's NQU2023. 5-minute time frame. I put a horizontal line on the 12:50 p.m. from yesterday, Thursday, July 20th, and laid it on top of the relative equal high, which is at 1:30, Thursday, July 20th, all on a 5-minute basis. Then I highlighted the fair value gap above it on the 12:20 5-minute candle in NASDAQ. That's what that little blue shaded area was. And I gave you the liquidity in the form of buy side at 15,714 3/4. And I highlighted the sell side liquidity at 15,547 even. Now, between the low on the 5-minute chart at 325 yesterday, where I have the sell side liquidity annotated, and I'm talking about a chart I tweeted, and then the high of 11:35 a.m. yesterday. So I'm showing you a specific range, and I showed the buy side liquidity inside that range. Now, think about what I said in the tweet. I said I have no bias right now. That means, can I trade? Can you trade without a bias? Absolutely. Absolutely. You can trade all these small little minor fluctuations inside that range between the 11:35 high in NASDAQ of yesterday to the low of NASDAQ at 3:25 p.m. That range, if you divide that in quadrants, that's grading a price swing. Okay, I have a lesson on that on my YouTube channel. In terms of premium and discount, if you put your fib on that high to that low, I highlighted inside the range from the low at 325 back up to the high at 11:35, and this is all on a 5-minute chart. I showed you the internal range buy side liquidity at 15,714 3/4. What I'm saying, or what I'm drawing your attention to, is I didn't expect, because with no bias, I'm not saying that I think that we're going to go back above 15,800 at the time I tweeted that. And I wasn't certain if they wanted to take us below sell side liquidity yet. So I wanted to see how we traded going into the 9:30 opening bell. But I shared with you the imbalance inside of that range that has my attention. It's that inversion fair value gap. It's like I don't know what you would call that color. Give me all of your opinion about what that color is. The fair value gap that I highlighted on the 5-minute chart. My wife's told me so many times I'm colorblind. Maybe I am. I don't know. But the candle is 2:15 p.m. Thursday, July 20th, 2023. On the chart that I tweeted, I always call it like an orange, but every time I say it out loud, orange, and I see it, I don't think that's a good. I don't think it's a good description of what hue that is. But what color would you call that? And whatever you guys collectively get to as a majority, I'll refer to it as that. It doesn't look like an orange now that I'm talking about it, but that imbalance, notice that it's been utilized multiple times here. So if you take your Fibonacci and you drop your fib on the low of the 5-minute candle at 2:10 yesterday PM. That low comes in at 15,665.5. And then you highlight the high on candle 2:20 PM on July 20th, 2023 of the 5-minute chart on NASDAQ. And that high comes in at 15,644 even. If you drop your fib on that, on those 2 price points, and you add the quadrants, the 0.25, the 0.75, and the 0.50, that'll give your 4 gradient levels: the actual high, the upper quadrant, the midpoint, the lower quadrant, and the low of that SIBI, or sell sign imbalance, buy sign efficiency. If you do that, look at how price reacted off of each one of those levels. But notice that we ran for the buy side first. So that 15,714 in 3/4, once it hit that, what would be the opposing draw on liquidity? What was in the chart that I showed you? The 15,547.5. I'm sorry, and even. It's not a half, I'm sorry. So 15,547 even. That's where sell side is, below that. So at 9 o'clock, we went up there at 9:05 above the buy side. And then at 9:30, we went above it. And then at 9:35, we did it again. We went lower, traded down inside of that inversion fair value gap from the 2:15 PM 5-minute sell sign imbalance, buy sign efficiency. It's the orange shaded fair value gap I showed in the chart this morning on Twitter. So we moved lower below that inversion fair value gap, and then at 10:10 and 10:15 on a 5-minute chart, it went back up into it, repriced to the bottom of that, and then did what? It ran for the sell side that would be existing right below the 10 o'clock low. We went down, it didn't get below the 15,547 level yet. But inside of that movement lower, if you drop down to a 1-minute chart, I'm actually saving myself a lot of time doing a video today. I was like telling my wife, I said, I'm probably going to do a review video, but I'm just not feeling it. Like I'm growing more into it now because I'm talking about price, and it's distracting me from my morning, but morning in the sense that my pets look gone, not the morning in the sense of the time of day. But if we look at the 1-minute chart, after we hit the buy side at 15,714 and 3/4, what took place? Start at 9:30, put a vertical line on 9:30. I'll give you time to do it while I'm doing it. So put a vertical line on your chart at 9:30. I'm going to walk you through how to back test. And I'm going to piss a lot of you off because I'm not doing it with a chart. But this is better. This is better. It forces you to go into your chart because I'm telling you all the pertinent points of reference. We're all looking at a 1-minute chart right now on NASDAQ, and the symbol for trading view is NQ2023. 1-minute chart, NASDAQ, with a vertical line at 9:30. At 9:30, we have a Judas swing. It rallies from, where's it start? At 9:30, we drop down into that inversion fair value gap. Then where's it go? It runs right to the 15,714 and 3/4 level. What is it doing? It's doing 2 things there. It's pricing in the morning high during the opening range. When is the opening range? Between 9:30 and 10 o'clock in the morning. Put another vertical line at 10. I'm sorry. Did I say 10:30? 9:30 to 10 o'clock. This is the only thing about doing things live, because when you listen to it, and it'll drive me nuts when people ask the same questions. You said this. Why did you say it? It's just, I'm human. I made a mistake. So I want to make sure I'm saying it correctly here. The opening range is 9:30 New York local time in the morning to 10 o'clock in the morning New York local time. So it's a 30-minute window. So that 30-minute window, we see price at the open at 9:30 on a 1-minute chart. It opens, drops down into that inversion fair value gap. Then it rallies up above the high that was formed at 9:08 today. So 8 minutes after 9 New York local time. That high comes in at 15,717.50. The high at 9:34, 4 minutes after the opening bell, that high comes in at 15,719 and a quarter. So we ran out that high that was formed at 8 minutes after 9. It reacted off of the inversion fair value gap that I tweeted this morning. Then what happens? Look close. We're looking at a 1 minute chart. The market rallies lower and takes out the low formed at 9:31. Then looking at the high that formed at 9:34 and 9:35, that was above the buy side liquidity I gave you a chart with this morning, it displaced lower, below a swing low on the 1 minute candlestick at 9:31. Do you see that? That price leg that makes the lower low at 9:41, from that low at 9:41 time to the high at 9:34, that displacement leg, does it have a fair value gap in it? Yes. 2 of them. At 9:38 and a higher one at 9:37. When you have 2 fair value gaps, what did I teach you with the model 2022? You have to factor in the likelihood that it wants to go into the second higher one. So your stop would have to be what? It has to be above that requirement for that fair value gap. So your stop would have to be at that high at the 9:34 candle. Look at the low on the 9:36 1 minute candlestick on NASDAQ. See that? That right there is the high of the uppermost fair value gap inside that displacement leg. Go to the left 2 candles on a 1 minute candlestick chart. You're going to be on the 9:34 1 minute candlestick on NASDAQ. Draw a horizontal ray, or I guess it's on TradingView, it's called a ray. Highlight the ray as a trend line. Click on that. And then go over to your 9:34 a.m., July 21st, 2023. Drop it on the opening price of that candlestick. Yeah, horizontal ray. Why did I say ray? A horizontal ray. And drop it on the opening price of the 9:34 candlestick. Look at the bodies on the candlestick of 9:45 and 9:46. It's respecting that, right? What is the low of 9:34's 1 minute candle? 15,697 and a half. Put another horizontal ray right at that. So you have the 2 bodies at 9:45 and 9:46. Those bodies close and open inside of the 2 price points of that bearish order block with a fair value gap after a displacement lower, after buy side has been taken. Is that candlestick at 9:45 and or 9:46, is that not the 2022 model that I taught you last year? Yes. And then I mentioned at the time of our discussion this morning here in this Twitter space, I gave you go back to your 5 minute chart for a moment. I gave you the 9:30 p.m. Thursday, July 20th, 2023. The 9:30 candlestick on the 5 minute chart of NASDAQ. I told you that's a fair value gap. Be aware of that one.